Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 1st of October. All right, now as we just edge into the start of the Asian session, the whole issue around Trump's impeachment is really gathering some steam, and I'll show you some of the news in a second. But there's been a big increase of news about the whole issue across the US. There's a big surge of public opinion that if this is the case, that there has been some misdoings with the Ukraine, then Trump should be removed. So just be prepared for this to escalate very quickly. Now, just on the other side of it, Euro's looking like the best trading pair at the moment. Okay, it's dropped down through the hourly, daily, weekly levels, support levels. So it is sort of just cruising to the downside, and the Chinese are sort of coming back and saying it's going to hurt both sides if you start delisting our companies. So Trump's in all sorts of troubles with this impeachment, right? It is gathering steam. He was trying to diffuse it very quickly, saying it was all fake news and all these sorts of things. But what we're starting to see is that it's building pressure and momentum. So that could actually turn Trump into, throwing barbs at China and trying to push some sort of international event to get things moving. So the dollar index itself, pretty much coming off because of the euro, but it is sort of still heading to the top side. And I would expect with these impeachment proceedings, the way Trump has been doing things for the last year, as I said, I reckon we'll see more tariffs or something on China trying to stir something up there. The equity markets, though, don't really reflect the pressure that's going around at the moment. So the currencies just sort of behaving quite normally in the equity markets as well as this story slowly builds. Now, if I just give you a look at the technical levels at the moment, I'll have a look here. So pretty much not a hell of a lot going on here on the Aussie and Kiwi just at the moment. We have the RBA expected to cut interest rates today. Now, that's fully factored in, right? So don't start to think that you're going to sell just because they've cut rates. That's done, right? So what you want to do is have a look at the statement and see what they're talking about. I think they're going to be erring on the side of caution. They got their back against the wall at the moment. And it's like the Kiwis. They sort of preempted a half-point strike last month to get things moving, but it's still cruising to the downside as well. Dollar yen is just trading sideways through really short-term support lines. I guess it's above the cloud at the moment, but it's not really going too far. Dollar CAD sticking in a tight sort of range for it at this stage anyway. Oil, as I was suggesting, is falling. That favours a move to the top side, but there's a few weird geopolitical things going on at the moment that are causing a few issues. Now, sterling continues to edge to the downside. There's a bit of loose price action at the moment. So if you are trading sterling, and particularly outside that UK session, right, it's getting very loose. Liquidity is getting a bit scarce. There's random updates on the news services. So you're going to see sterling jump around 10 or 15 points quite often. So don't be surprised if you are running positions and you get taken out. Well, that's just part of playing with something which is extremely high risk. Now, here's the euro. It's been trending down nicely. We had a bit of a support line here. There's a bit of a loose price action, but it is down below 109 for all money. It looks like to me it's heading towards much lower levels. And if I just give you a look at the euro here on a couple of different time frames, so you got the hourlies here pushing down. You can see where it's broken down through on the daily support line, and it already broken down on the weeklies. So euro, for all intensive purposes, is heading south. Now, the only thing that's going to change this is weak US dollar news, right? So outside of that, everything out of the Eurozone at the moment is weak, right? So I don't think that movement is going to change. Of course, the geopolitical events is our nemesis at the moment. Now, if I just bring you back to the MyFX Trading Hub, this is the thing we've been battling for so long, is these geopolitical events just won't go away. And it's because the people who are driving them, particularly Trump, they don't want them to go away because he seems to think he's got control of the markets and public opinion if he can control international events. Now, Brexit is just a nuisance. The UK have proven that they can't sort of sort themselves out. Most of the UK people I know are very embarrassed about the whole situation. But once again, put that aside, we're looking for trading opportunities. And sterling, it may seem like it's easy, but you know what? It's pretty loose. And now this China-US trade issue, as I said, this is probably tied to the hip with Trump's impeachment. The higher the escalation of the impeachment, I think the more intense the talks will, or the barbs will go with the China-US trade issue. Now, let's just have a look where the main action is here on today, the upcoming events. All right. Now, the RBA, as I said, this is a pretty big event. Obviously, any central bank event is, especially when they're cutting interest rates. Now, they are expected to cut. I guess you see a bit of a knee jerk, but it really is going to come down to the statement to see what happens from here. We do have the RBA governor talking much later in the day, so 5 hours later. So just keep an eye on that. And then we have a bunch of other, reasonably important numbers. The CPI estimate out of the Eurozone couldn't come at a better time, right? Eurozone on its knees, or the Euro, I should say. It's breaking levels. All we need is the inflation numbers to fall off, to drop, and we should see Euro just dribble off to the downside. That's probably our best trading opportunity, I think, today, much more so than the interest rate statement, because it's, that's going to move things. But this is, the Eurozone is moving lower, right? That's what I'm trying to say. Canadian GDP numbers, well, Canada's not really doing a hell of a lot. I'd be watching, let me just clear that screen up a bit. The two prime ones, obviously the interest rate cut, don't neglect that. But the US numbers and the Eurozone CPI, now, this is about connecting the dots. Euro's going down. It's the euro against the dollar. So if we get weak Eurozone inflation numbers and stronger ISM manufacturing numbers, well, you know what? Euro's going to be lower. That's what's going to happen. All right, so make sure you keep an eye on that. Of course, if you are trading the Aussie, keep an eye on the statement, as I said, but also keep an eye on what Governor Lowe speaks about 5 hours after that release. It's pretty important. UK manufacturing, well, I'm taking that out of the picture. Canadian GDP doesn't do a lot for me either. So that's the two key ones, and we'll see how that plays out. All right, guys, have a good one. Cheerio.